Hello, everyone. This is Kara Hayward, the host of the Payments Innovation Podcast, bringing to you the Fintech Karaoke series, focus on partnerships in the Fintech community. I'm so excited today to have Itai Damti from Unit. Welcome, Itai. He is the CEO and co-founder. Could you quickly just give a little background about yourself and Unit for our listeners?
Sure. It's great to be here, Kara. Thanks for inviting me. My name is Itai Damti. I'm co-founder and CEO at Unit. I am New York-based, but Israeli by background. The problem that Unit solves is that building banking is still too hard. The solution we offer is a simple and powerful banking as a service platform. We help companies launch bank accounts, cards, payments, and lending in weeks. And maybe just to tell you a bit more about the problem in depth, what companies have had to go through in the last 5-10 years when they wanted to build banking was basically deal with three big sources of brain damage, if you will. One is they had to find the bank relationships and manage those bank relationships, and it's pretty complex. The second is that they had to stand up a compliance team, 15 to 20 compliance policies, and they had to operationalize them and go pretty deep on compliance. And the last thing, which is usually an afterthought, but it's very important, is they had to build a lot of tech to take a banking product to market. So regardless of whether you want to launch a checking account, a card, a payments product, or lending products, you would have to do all of the above. There are different flavors to solving the problem, and that's what banking as a service stands for. Our own flavor is owning all of the above: bank relationships, compliance, and tech in a way that leaves our clients with APIs and dashboard they can use to launch in several weeks and not years, which was the case before.
That's fantastic. Yeah, because I think a lot of our listeners do, they hear the term banking as a service, but I think it means a lot of different things out there. And there's definitely a lot of providers, but each kind of has their own take on it. That's fantastic. And actually for our listeners that don't necessarily exactly know what banking as a service is yet, and I think for us, it's kind of in our brains, right? But if you could maybe just provide that example of what exactly it is. I mean, I know you mentioned, putting compliance together with the tech and the banking relationships, but what is it that you're actually trying to power? And if you could talk maybe a little bit about the customers that would utilize your platform.
So I think it's worth taking a step back and really trying to understand the different blend of fintech builders today and in the next 5 to 10 years than what it was before. So we look at the evolution of fintech in the last 10 years, right? Since 2008, the financial crisis, we have a first generation of fintech companies that we call Fintech 1.0, which are pure play fintech companies, right? Venmo, Lending Club, Betterment, Wealthfront, Acorns, all these companies. What's common to all of them is they've taken one product in their respective department, and they decided to innovate on that product and beat the incumbents at getting scale and owning market share. And that's the first generation. And there are some success stories that have come out of that wave. There are also hundreds of companies that tried to fight with the incumbents and basically lost and died because it's very hard. Economies of scale, distribution, etc. That's the old fintech way. We think what's starting now is a different way to think about fintech, in which companies build fintech in their product as a feature. So on one side of the spectrum, you have younger companies that have a vertical focus, maybe companies that go after the freelancer segment, that have a very specific combination of software product and financial features they want to launch. So that's one flavor of the demand. Another flavor of the demand is we have a lot of clients who are bigger companies. Some names who are not clients are Uber and Shopify, who are pretty famous for getting into financial services. And these companies want to take advantage of the economies of scale and the distribution they have, and they want to lower friction, give more value, capture more value, monetize. And so we see a lot of different kinds of flavors of demand. We think there's a big difference between the old generation in fintech, which is pure play fintech companies, and the new generation of fintech, which are companies that do it almost as a quick exercise in giving value and entering deeper into financial services. So I can tell you more about the use cases in a second, but just a couple of things to point out. We see definitely more builders in this wave of companies because there are so many successful software companies that have been spinning the flywheel of distribution, trust, software data for 5 to 10 years. Now they want to capitalize on these assets. So the list of companies is much, much bigger. The second thing is that they have a different DNA. It's very different for a company to grow banking into an existing product than to start Chime, which is a Fintech 1.0 type of game. And so the DNA of the builders is different. They ask for something more plug and play. And then I also believe personally that many of these FinTech 2.0 companies have a higher chance of being successful than the first wave of FinTechs because they're no longer fighting against incumbents in the distribution game. They have an unfair advantage in the form of data, software, trust, distribution that they can leverage into being successful. Happy to give a couple of examples, but that's kind of the theme as to who is building on top of Unit and how it's different.
Yeah, absolutely. Well, I think I would love to jump into some examples in a minute here, but maybe what we could dive into first is just talking a little bit about what Unit brings that's a little unique to the other players in the system. So first, if you could just talk about, the emergence of these banking as a service platforms and what that industry looks like today. I know you mentioned the 1.0 versus 2.0. I think banking as a service as a term didn't even exist about 5 years ago or more, right? So if you could talk a little bit about that, and then really what makes you unique compared to some of the other players. I think you've slightly touched on it, but I want to dig a little deeper.
Sure. So let's look at the history of how people have built FinTech in the last 10, 15 years. There are three different evolutions of how this space is looking. First step was for companies to go to banks and then go through what I mentioned. One is managing the bank relationship. The bank that was probably the most synonymous with that phase was Bancorp, right? Bancorp is still a pretty successful bank in banking as a service. You had to go to them, manage a 5-year relationship with them, and basically negotiate commercials. That's one. Second, as I mentioned, you have to write and operationalize between 15 and 20 compliance policies, including InfoSec, privacy policy, KYC, KYB, AML, complaint management, the list goes on and on. So you had to write all these policies and you had to hire 4, 5, 6 people that can then operationalize and take care of them day to day. The last piece that I mentioned was technology, right? You had to, if you wanted to build something like Chime, which was built on top of Bancorp, you had to take responsibility for owning a lot of the ledgering pieces and the KYC pieces and the fraud prevention pieces. And you had to cobble it all together and make a simple and consistent product out of that. So I just described the problem again, but our approach and the way we think about it is that we want to bundle all of that. So what happened after the old days of going direct to the bank was that some companies like Galileo said, we can give to the banks or to the Chimes a middleware component. That's the second step in that evolution. By giving them the middleware component, they made some of the card issuing and ledgering pieces a bit more simple for both sides. But what they neglected to do was to take care of the bank relationship. It was still the game of finding a bank, trusting that they have a Galileo, and then building on top of them. But they also neglected the compliance issues, right? You still had to write all these compliance policies and operationalize them. And it's a big burden for these companies. And so what Unit does is the third step in that evolution, which is a platform. We have all the elements built in, compliance, tech, and bank relationships. And so all of the steps that I've mentioned are not applicable to working with us. The idea of working with Unit is signing up on the website, spinning up a bunch of accounts and cards and payments and even cash advance and lending, and going to market within weeks and not months. I would say that in the competitive landscape that you see today in the market, you have companies like Unit that act more like platforms, and you have companies that are still in the business of believing and selling middleware and small components you can use when working directly with a bank. We think it's important to work with banks in some cases, but we see the majority of the companies in the market not asking so much about bank relationships as much as they ask about getting to market quickly and doing it on a tech stack they like. So that's how we differentiate. There are more companies in our category. We believe the market is very nascent still, and we expect it to grow very, very rapidly. We also get excited about growing the market. I think that the old tools don't really have the potential to grow the market. I think they capitalize on some organic growth to the market. Companies like Galileo have been quite successful just by capturing demand across neobanks. But what I think Unit can do, we can educate and create a new generation of builders that feel empowered because it's so much simpler.
That's awesome. I think that's a really good point too. And I think a lot about scalability as well, right? Where, to your point, the 1.0, you had to scale people, right? And other types of resources where, obviously as you grow, you always have to add some people, but you're really trying to make it a true plug and play where you're not having to deal with adding another compliance person for every, X number
Absolutely.
of users that you have, right? So
yes, and I think, I think it's important to grow your company in the right direction, right? So what we offer companies that are not yet sure if they're going to be successful in banking is that they don't need to have that headcount, and they don't need to wait before they get into the space. What we offer to other companies at scale is that, I've seen from the inside at Unit how do you grow a compliance team, a fraud prevention team that scales with the customer base. So if I'm thinking about this problem as something that every growing company is suffering from, it's better to leave this job in the hands of a specialized, concentrated, efficient player like Unit, rather than trying to do it yourself. Compliance is neither differentiated nor easy. So if the combination is undifferentiated and hard, you want to give it to someone else, because shouldn't be your core business, shouldn't prevent you from succeeding.
Yep, absolutely. And it's interesting, you mentioned it's undifferentiated, and I agree with that from a value prop or like distribution perspective. But I do find in this industry that the nuance of compliance is what makes it hard. And so I think that having that expertise on staff, like I know very intimately that you have a wonderful compliance team that has years and years of experience and understands all these different business models, which is so important. And you become almost like the expert, right, or the consultant in that space that's actually building the technology. That's great. So maybe now we can touch a little bit on like some of the types of customers that you are seeing build onto the Unit platform. You've mentioned 2 use cases thus far. One, which is the someone just trying to dabble, right? Get to market, test out maybe a banking scenario. Is this worth it or not? Maybe they're a startup. And then the larger companies that are already looking to further capitalize on the client base they've acquired and bringing them more value-added services. So maybe if you could just touch on a few of those different segments in a little more detail, that'd be great.
Yeah, so the mentality is very different between the two. Slicing customers by size and mindset is one way to do it. We tried not to take the stance about what types of products people are going to build on Unit, because we're a platform. And so we have clients from all sorts of backgrounds and industries. Some of the, I would say, high-level clusters we're seeing in our customer base are freelancers. So banking and banking products for freelancers have been a huge scene in the last couple of years. And I think we're only at the beginning of that era of the entire workforce turning into a freelance workforce. Some companies have identified, and I can share some names because they're public as customer stories. Companies like Lance and Moves have built on Unit tools that are unique to freelancers. And so, as I mentioned before, they don't take a dumb bank account to market, right? Those companies are investing a lot in the experience and in the problems that are unique to that space. Some of the problems that freelancers face are faster access to cash. If I'm driving an Uber and I know how much I made this week, but I haven't been paid yet, it's an opportunity for one of these companies to step in and cash advance me the amount that I expect to get paid. So that's one way to think about value. Another way to think about value is, in the past, people struggle to differentiate between their personal finances and their business finances. So those companies give them a place to consolidate their business finances and think about it as a separate wallet for business purposes that helps me to optimize. Tax payments is a huge problem for people who are independent workers. They need a way to calculate, set aside funds for tax payments, and then the IRS knows how to build those accounts at the end of the quarter. So that's another feature that they offer with Unit. Cashbacks and relevant rewards, expense tracking, the list goes on. And so that's really a solid cluster of features that we see emerging in freelancers that we're very excited about. That was the first vertical that we saw very clearly in our customer base. Another type of vertical is what we call the business operating systems. And that's where the largest clients come into play, which is, what if you dominate a specific industry, let's say the restaurant industry as it comes to software? Or what if you provide tools that do invoicing, scheduling, and project management for small businesses? You're in a great position to introduce banking into this mix and basically give more value and capture more value and see more data and finance. And so we have a lot of clients right now that are winning their respective industries as it comes to being the operating system for those businesses, and are trying to introduce banking to provide the missing piece for payments and expense tracking, etc. So these are two business-related use cases that I can mention. One company in this space, by the way, they're only in early days, but we really believe in their product, is With Us. With Us is a company that helps independent creators who want to collaborate over a project, a website designer, website builder, a copywriter, call it a one-time syndicate for project purposes, get paid, split payments between them, manage the expenses, and then move on to their next project. That's a really good example for a business operating system of sorts.
That's awesome. I wasn't even aware of that use case, but it makes so much sense. Yeah, that's awesome. Yeah, I think that's really, really great the way that you're kind of breaking it down from that segmentation perspective, because I think that's where a lot of the incumbents have really fallen down, I think, in the past, is the digital experience that truly understands that vertical inside and out, and really and provides not just the front end experience, but the back end capability completely embedded. And so, yeah, I'm so excited to see more of these use cases come out. That's awesome. So, maybe we could talk a little bit about, I think one thing that's unique about Unit, and again, this space is constantly developing, but there's not a lot of banking as a service platforms that provide the wide array of products and services that you do, right? I think you have really built pretty quickly in terms of the card space, right? The loan space, accounts, and others. And I'd love to hear a little bit more about your vision around, the entire platform, what partnerships may actually provide to you in terms of that expansion. So just your vision on that would be wonderful.
So two observations we have as far as the financial products is, one, I think the universe of financial products that we could offer is quite bounded because the list of financial products in the market is not that huge. We think about it in 4 buckets, right? Accounts, cards, payments, and lending. Many things you see in the space are permutations or extensions of those ideas. So we've covered those bases, and I think we will go deeper in all of them. But yes, we do believe that there is a finite universe of financial services. We think the magic is not in providing those financial services in a commoditized way. We think the magic is in baking them into vertical operating systems, as I mentioned, or doing more innovation on the automation, the experience, the software experience that goes around them. I think also there is an interesting case for rebundling and more types of financial services. I see a lot of the uniqueness of Fintech 2.0 in the rebundling effect. So in the past, people said there was an unbundling of the bank and a rebundling of the bank. And I think it was one of the $1 trillion questions of Fintech 1.0, what is going to happen? What I think is unique to Fintech 2.0 is that once you serve, let's say, small businesses or restaurants or furniture shops or barber shops, you have an ongoing rebundling mentality because you have a checking account for them today, and you have a loan account for them tomorrow because you can see more about their business expenses, their staffing, their invoices. And then the next day you may add a credit card. And then the next day you may add another type of financing and payment. So I think that what's unique to our era of Fintech, and the reason Unit chooses to be pretty vast in the financial products, is that on a long enough time frame, many of these companies will need all of the financial products and they would want to build in one stack. And that's why we chose to be quite deliberate about offering more. And we know that it comes at a cost, right? Less focus, if you will, on every vertical, but we think that the bundled mentality, the idea of bringing the full catalog to relationships, is very powerful. You mentioned partnerships. Yeah. So we take a pretty deliberate approach about partnerships. We obviously have a pretty high profile partnership with Currency Cloud that helps our clients expand into a difficult space that Unity doesn't plan to do itself, which is international payments. We have other partners like Plaid. Plaid communicates with us in 2 different ways. One, every account on Unit becomes visible to the outside world. And so if you have an account on Lens, which is the freelancer company I mentioned, and you want to connect it to QuickBooks or Gusto or Expensify or Cash App or Venmo, this is going to be visible in the Plaid user interface. So that's one type of integration. We also know how to link accounts that sit on Chase or Citi via Plaid to the Unit ecosystem and send funds to and from them. So that's another flavor of integrations. We have another one with Abound that helps calculate taxes for freelancers. And we generally think that Unity is a platform game more than we realized when we started, because there are so many cool extensions of the platform that you can build once you identify someone else that you can plug in. So yeah,
that's awesome. Well, and it allows you, again, like to your point, taking the approach to have the various different financial services offerings it allows you to do that that kind of build by partner analysis as you're creating more scalability and that operating system mentality, right? Where maybe, you know, you guys are very, very good at the compliance piece and building out the actual like payments and accounts, but maybe someone's already built that tax platform and it makes way more sense to partner and you can go to market much quicker. So yeah, that absolutely makes sense. Perfect. Well, I think the last thing I kind of want to hear from you is maybe just sort of your thought, you know, your longer term outlook, right? So I want to hear a little bit from you because you see a lot of different use cases. What areas do you think are still kind of underserved or under invested in? That's probably not even the right word, but places that you could see there being a lot more improvement in the future.
So I did mention the universe of financial products is quite finite, right? The way I see it. And I think there's so much more to do on the software side than on the financial product side, but I will mention two flavors of financial product expansion that excite me personally. I think what has happened in terms of banking as a service in the last 2-3 years is that there has been a lot of focus on debit cards and accounts and payments, which are kind of intertwined because a debit card is a spending device from a checking account. So that makes sense. But I think there is a growing appetite among software companies that have data to launch credit products, which I think are the ultimate, you know, demand that's going to make this ecosystem 20x, 50x bigger. So I think credit as a space is something that really excites me. When I think about credit cards for consumers, for businesses, but mostly for businesses really. And when I think about the ability to give loans to help build credit, we get super excited because we see how much data our clients have about their customers and how much appetite they have to own more of the upside. And I do see a future in which many companies grow a desk in the company, the credit desk or the lending desk. They don't need to have 20 people on this desk, but they need to have some qualified data scientists. They need to be able to look at their business data and make decisions and then communicate with unit or with whatever their financial infrastructure is to facilitate those loans and keep track of their lifetime. So that's one big theme that I think will define banking as a service, or at least the most interesting part of banking as a service in the next 2-3 years. I think there is still a tremendous opportunity in international expansion. We took our previous company to 20 plus markets globally in fintech. We know how nuanced it is, and I bet that unit is going to be much harder because banking is a heavily regulated industry in every country. And so I think there's a lot to do when it comes to empowering different builders globally, but we're trying to take a thoughtful approach to what is the next step and how do we want to expand into other countries.
That's fantastic. Well, I love hearing that, obviously, right? Being from Currency Cloud, but I think we see it too, right? In terms of there's a lot of demand currently that we see in terms of whether it's US fintechs looking to expand overseas, or we're seeing a lot of European fintechs where they've kind of tapped out their markets and looking to that next US expansion or other countries. And that expertise and that capability to provide a seamless experience as possible, but understanding the different regulatory, even also just the different consumer and business appetites in terms of what they expect. So that will definitely be an interesting space for sure.
Absolutely. And I think the demand we see right now is the tip of the iceberg. I'm going to use an example from a different space, which is Stripe and payments acceptance. We've seen how one player that has the right rails and the right access layer, how much they can grow a market and educate a market and really be omnipresent in their space. And so I think that even if you speak to 50, 60, 70 companies from different markets globally that want to build banking, I believe that once you launch banking in those markets, the number will grow 50 to 100x just by virtue of that infrastructure being there. People can imagine what they want to build. People can fund what's getting built in all these markets. So I think we need to squint a little bit. We need to take a leap of faith for those markets that haven't been served yet with banking as a service. But I think there's a huge creative energy in multiple large markets for that. And we see local banking as a service players growing, obviously.
Yeah, absolutely. I'm very excited for that too. And I agree, it's just the tip of the iceberg. Wonderful. Anything else you'd like to share with our listeners before we wrap up today?
So I actually thought what would be the best way to explain the philosophy and the advantages that we would like to bring to the market. Unit has a unique philosophy when it comes to speed and helping companies focus on what matters. We look at this space a little bit differently. We try to own a lot of the painful elements, as I mentioned, the compliance and the fraud and the bank relationships, so that companies can focus on what matters. We took a unique approach to ledgering, which we think gives our clients a lot of flexibility. And so just ending it with a note of come build on Unit. We have a public sandbox you can sign up for. It's very quick to prototype. We have a new product called Unit Go that lets anyone spin up bank accounts in minutes without even going through this weeks process. And we can't wait to see what gets built on top of Unit.
Wow, that's exciting. Well, yes, as you heard, definitely check out Unit, and they've been, I think, wonderful partners in this space today. So Itai, thank you so much for joining us on the Payments Innovation Podcast, and look forward to talking to you soon.
Thanks, Kara.